What's going on, YouTube? Stocks by the numbers. Welcome back. Wanted to do a quick update here on a company that, of course, we absolutely nailed yet again. Name of the company, Under Armour, ticker symbol UAA. Now, back here, the company hit a double bottom here at 697 when I originally made the video. I said that we can bounce around here inside of this descending wedge and then probably break out and then, of course, start to run into these earnings here, looking like about the first week of August. So that's going to happen inside of about the next 3 weeks. And as we see here, the stock was at like 702 or something like that, 703 when I made the video, whenever it was. And as we see here, the stock broke up yesterday and got up to a high of $8.11. So even if you didn't play the option side, if you just went in and you bought shares of UAA, when you saw the video and you saw the double bottom and the descending wedge ready to pop out, obviously you're up like 13-14% already just on the shares. And it didn't even move yet the way we wanted it to, right? So it could potentially pull back here. This is why I drew out my path like this, right? Because it's probably going to pop out and then potentially try to like retest one of these fibs before it goes higher. So of course it could continue to climb because in my opinion it's still undervalued and it should still be on its way up going into these earnings and of course long term to fill that gap up there at 1370. But more importantly, even if it does pull back here to 758, I believe we're still on schedule there. And if we switch over here to stock charts, you can see, looking at the daily, not only did we just touch the top Bollinger Band and then slightly pull back a little bit, but here we have our 50-day moving average at 758. So now we have our fib at 758 and the 50-day moving average on the daily at 758. So to see a slight pullback to about that 7.5 level and then bounce back up going into the low and mid 8s and potentially trying to get back to this 200-day moving average of 893, definitely feasible. And obviously in my opinion I still think it's a buy right here at a little under $8. If you get in now and it does pull back to 7.5 again, if it begins to climb into the 8s and towards 9, I mean you're going to be a little upset, but you're not going to be really that upset. And of course, if you do have the liquidity, if you step in here at 8 and it does pull back to 750, 746 or whatever, obviously you can step in, you can buy more shares, but of course that's entirely your own prerogative. We got the MACD, obviously, has been climbing. The stock has been doing very well. As of late, RSI on the daily was about 61, so we still have some room to grow. But again, it just touched that top Bollinger Band on the daily, so it could potentially cool down for maybe a day or two. And here, you see we hit a high of 811, and you can see the mid-Bollinger Band is 826. That's why I'm saying it may calm down and pull back slightly for a little bit before continuing that climb to 826, and then the other 200-day moving average in the high 8s, and now you have the 50-day moving average on the weekly here in the high 8s. So, in my opinion, really only a matter of time. I still like UAA. It's moving very well for us so far. And as we see here again, the MACD was slipping, completely flattened out here for about 2 months and change. And now it looks like it's just about to start to curl on the weekly here. So we could, again, have a lot more upside here, in my opinion, on UAA moving forward. RSI on the daily, as we see here, only about 45. So, again, on the RSI on the weekly, sitting here at about 45. So, again, on the daily, the RSI looks like it got up to about 65 random ad, and then it pulled back to about 60 where it is right now. So that's why, in my opinion, we could cool down for a day or two. We could have that pop, and then that'll bring the RSI to about 70 on the daily, which again may have it calm down for another day or two after that. But overall, again, to show you on the weekly, RSI is only 45, and the MACD looks like it's potentially starting to curl. So, in my opinion, it's moving very well. Of course, we're up already from the time I made the video. Again, we're dealing with a $3.37 billion company. They have a PE of less than 9.5. They've been doing very well on the EPS side the last several quarters. And they're basically maintaining a little over that $1.5 billion mark quarter over quarter. And of course, we're seeing our profit margin that dropped down to flat back in Q1 of last year and has since been climbing consistently 5.5, 7 3/4, up to north of 12.25% on the profitability side. So the company, in my opinion, again, really looking good. And when I saw it all the way down here At 7, we saw the double bottom, we saw the descending wedge. Don't make it harder than it is, right? If you have the liquidity on a situation like this, you step in, you buy shares. If you have a little less liquidity and you have to play the option side, again, we're talking about a move from 7 to almost 14, right? And I did draw out, look at this path. If it takes till this earnings, again, could potentially go out till November, even late November, around Thanksgiving time, right? So if you really want to play the situation and you want to be sure that you're right, you have to buy time. That's what I always say. Time is more important than strike, right? So if you were able to buy out till November, December, let's say, but you had to increase your strike, which obviously would make the option more speculative, which would make it cheaper, right? So if we go out to November and we look at like 8s or 9s, they're probably going to be much more expensive than a 10 or an 11. So again, it may seem like, wow, this thing really has to move a lot, for this option to really become profitable. Yes and no, right? Because again, even if you did step in down here in the low 7s, now you're already up to 8. So if you had like November 10s, you're 33% of the way there, right? Because you needed it to go from 7 to 10, and it already went from 7 to 8. You still have a couple of months left on the contract, and it's already heading in the right direction, basically immediately after you bought it, which is what you want to see with these options. But again, whether it's shares or whether it's options, in my opinion, I think it's going to work out in UAA. That's why I liked it. I saw what I saw, and I said, I got to make a video. I got to talk about this one. And again, we made the video at around 7, and the stock yesterday broke above 8. So, in the short term, looking like a win here on UAA. And again, it's heading in the right direction, and I still feel confident about it. So I just wanted to do a quick update video here because I know a lot of people mentioned that they were watching it and that they liked the setup and that they basically agreed with the situation overall. And I know a lot of people stepped in and went long and bought shares and bought options. So congratulations to all you guys because it's heading in the right direction and it's looking pretty good. So I'm going to end it there. Once again, Stocks by the Numbers. I want to thank you guys for stopping by. Like the video, thumbs up. Algorithm helps me get more eyes on the channel. Handshake agreement. I have no problem doing these update videos, bringing you guys any new trades or potential long-term investments that I feel confident in. I have no problem making some short-term call-outs in the Discord, which again is in the description of every video. But all I ask, handshake agreement, I'll keep doing that. You push the subscribe button. That's all I ask. That is how you help me help you. But moving forward, like I always say, I understand that markets are rocky and we're very volatile here and we're very uncertain. They continue to climb these indexes higher, even though a lot of this economic data coming out is kind of wishy-washy. It's kind of half and half. They'll have, one metric that really just like meets. They have one, they'll have like that CPI metric that meets, and they'll act like everything's okay. Meanwhile, all of the other data coming out around it has kind of been trash. So, of course, they look for their reasons to pump up the market. And then when it completely shits the bed and it drops, 1,000, 1,200 points in a day, I'm referring to the Dow right now. But, when it has that massive cliff fall off, then all of a sudden, that's when they're going to go back to this economic data we've been seeing. And then they're going to say, oh, well, historically inflation's been here and it's still up here. So, people are wishy-washy and, everyone's a little uncertain as to what's going to happen. So that's why in the moment they act like everything's okay and there's nothing to be worried about. And then as the rug pull comes and everything comes crashing down, then all of a sudden they basically just repeat to you all this trash data that we've been seeing. And then they try to use that as the justification as to why we're selling off. Right? It didn't matter in the beginning and we were able to run up. But then once markets shit the bed, all that data is relevant, and that's the reason why we're going down. So, again, like George Carlin said, it's all bullshit, and it's bad for you. So, don't try to force trades. Take what the market gives us, and here the market gave us UAA at 7, and the sumbitch ran to 8 almost immediately after we talked about it. So, looking good here. So, thanks for stopping by. Stay positive, stay confident, stay focused, and I'll catch you guys in the next vid.